Jaguar and Landrover is now in this country that's destined for success. Part of the Tata Group, a group built on a foundation of trust and ethics. The Tata Group is India's most respected and best-known business group in the private sector. A group that has
Tata Group is a well-diversified group with 32 listed companies, a combined market cap of $135 billion and a shareholder base of 3.9 million. Each Tata company operates independently with its own board of directors and shareholders. While Tata Group is one of the most reputed and respected business houses in India, it has also taken the lead globally in various businesses. Tata brand has been ranked 34th amongst the global brands and valued at $21.1 billion by Brand Finance, a UK-based consultancy firm. In financial year ending 2014, Tata recorded revenues of $103 billion, of which 67.2% came from international operations. It exports products and services to over 150 countries with operations in over 100. Tata Motors is India's largest company and ranked amongst the top 5 commercial vehicle manufacturers globally. Through its subsidiaries and associate companies, it has operations in the UK, South Korea, Thailand, Spain, South Africa and Indonesia. Amongst them is Jaguar and Landrover, the business comprising the two iconic British brands. In this video, we will analyze Tata Motors' acquisition of Jaguar and Landrover from Ford on 2nd June 2008.
In 2000 and 2010, Tata Motors looked to consolidate its position in the domestic market and expand its international footprint through acquisitions and strategic collaborations. In 2004, the company acquired Korea-based Daewoo Motors, and in 2005, it acquired a stake in Hispano, a Spanish manufacturer of bus and coach cabins. In 2007, the company signed multiple joint ventures in Italy, Brazil and Thailand. The strategy was aimed at gaining complementary capabilities. Between 2002 and 2007, the global market from premium passenger cars was growing, although at a very modest pace of 2.4%. The overall attractiveness of the industry was moderate. It was difficult for new players to enter the industry due to the sheer size of the investment that would be required to produce premium cars. Also, there were not many opportunities for firms to attain economies of scale in the production. The bargaining power of the buyers was low, as most of the buyers were price takers and there was high brand loyalty among buyers. The suppliers enjoyed a high bargaining power as they were limited in number. There was no perfect substitute to a premium car. However, as automobile manufacturing technology was advancing, mid to entry-level premium cars were coming up with additional features. In terms of the industry competition, few global and renowned companies held the majority of the market share, and the rivalry among those companies was high. Another reason for high rivalry was high exit barriers. A company leaving the luxury automotive market would have to suffer huge losses to exit the market.
It is reasonable for Ford to sell off Jaguar and Landrover given of their poor financial performance. Ford has been struggling for the past few years to turn the two brands to be profitable. However, it is now experiencing financial distress and is ready to sell off these two brands to ensure its own survival. This explains why Ford is desperately selling off the two entities at a much lower price as compared to what it has paid a few years back. As for Tata, by acquiring Jaguar and Landrover will provide significant potential for revenue synergy, which includes greater international distribution, broader product range, better customer management service skill, and very importantly, gaining the access to the world-class engineering capabilities. Furthermore, we know that Tata has been working on diversifying their revenue sources. For the moment, Indian market still accounts for 90% of Tata total sales. Judging from the recent cross-border joint venture and acquisition initiative, it is obvious that Tata wished to reduce the company's dependence on Indian market. Overall, I think that this is a strategic move for Tata to take over Jaguar and Landrover. However, there are two issues that Tata have to consider moving forward. First of all, it is full of uncertainty for Tata to enter the premium car market, which it has no experience in managing one. We have seen how the Daimler Chrysler failed to combine a high-end automobile brand with a mass-market brand. However, judging from Tata's post-acquisition practices, it is not likely that Tata will want to manage Jaguar and Landrover from its headquarters in India. What we have seen from their past practices is that Tata will leave the daily operations to the existing management team and plays more of a supportive role to allow continuity in the operations. Ford has failed to turn Jaguar and Land Rover around. Now that all eyes are on Tata to see how it can manage Jaguar and Land Rover differently and bring the two iconic British brands to achieve a long-term success. It is important for Tata, therefore, not to be distracted by nationalism, cultures, and economic hiccups, so to stay focused on the development plan it has for Jaguar and Land Rover. Our next area of concern will then be in Tata's financing. We know that this is a 2.3 billion all-cash transaction, and Tata has also announced a 5-year investment plan whereby the company will invest another £5 million for Jaguar and Land Rover's product development and new equipment purchase. Tata's investors are uncomfortable with the level of debt being taken on, especially since Tata's share have fallen more than 20% after the acquisition. With such a high burden of debt that Tata has taken up, this could potentially bring down its credit rating in the future. So in conclusion, the road ahead of Tata is full of challenges. Tata has to therefore stay focused on the post-acquisition management and ensure that source of financing are well managed so that at the end of the day, the acquisition will pay off.
After all the analysis and history of the acquisition, the question remains about how good the results were. In this case, the numbers don't lie. JLR is now the 4th biggest luxury car brand, behind the German big three of Audi, BMW, and Mercedes-Benz. Moreover, JLR has also grown by an average of 32% over the past 4 years, spurring growth for the entire company. JLR also contributes 83% of the consolidated Tata Motors revenue and 100% of the profit for the entire company. This shows the whopping significance of JLR to Tata Motors, as it is the segment carrying both revenue and profitability for the whole company. 2012 share price was the highest for a car maker in that year, showing that any doubts from investors during the early years have been erased. Year after year, JLR has been breaking its records for revenue and profit, garnering £19.4 million in revenue and £2.5 million in profit before tax for the fiscal year of 2014. It is clear that the JLR acquisition has brought a lot of financial gain to the total Tata Motors Corporation. However, the move made a lot of strategic sense as well. Aside from improving the bottom line, the move also improved the image of the Tata car line. This is significant, especially since Ford was actually planning to explore a more mainstream product positioning. Upon acquisition, however, Tata ensured that they stuck to the luxury positioning, thus keeping both brand image aspirations alive. The move also provided Tata with a number of expansion prospects, particularly in China. Interestingly, in 2005, China was only 1% of total JLR sales, compared to the 25% share it has now, as the top market for both Jaguar and Land Rover. Through Land Rover, the company partnered up with Chery to open up a production facility in China. This is very relevant, given that high tariffs and shipping costs have made it difficult for most imported car manufacturers to enter the country. All in all, JLR had made a good decision in keeping its organizational structure solid. It didn't choose to move its operations to India. Rather, it kept the headquarters in the UK, and thus kept the UK heritage alive. It also worked with efforts that Ford put into play, tapping onto them as key resources as well. Basically, JLR did not fix what wasn't broken, as it kept JLR's core competency of quality in check. This stability is known to be a welcome change from Ford's management, which is often noted as erratic. Updating JLR's product portfolio was crucial to its strong performance. Redesigned versions of the Range Rover, the Evoque, and Jaguar's F-Type were launched, which helped it perform well in spite of economic downturns. Finally, JLR practiced a disciplined approach in financing its acquisition. Costs were kept tight and investments were very targeted, as they brought KPMG along to help them manage their finances. Management changes were also enacted to create long-term plans that ensured financial stability. Tata actually divested share stakes in group companies, like a 1.3% holding in Tata Steel, to generate enough cash to keep JLR in the green in terms of profit. Proceeds were channeled to JLR, which kept product development plans going, leading to its turnaround. While things are looking rosy for JLR, there are a number of potential causes of concern that it should look after. While its global performance has been strong, its performance in India remains with a lot to be desired. JLR might want to explore growing better in terms of its local market. JLR must also ensure consistency and efficiency in its upcoming manufacturing prospects in China with Chery and Brazil. As we know, joint ventures have their own set of challenges. JLR must ensure that they wade through these and continue its success. While China's growth has been strong, the company may be worried about sustainability, particularly given the slowdown in Europe, especially in the UK. JLR must be careful about the global strategy that it adopted and its reliance in a few markets. Finally, it is clear that JLR has been carrying the brunt of profitability and revenues for Tata Motors. This indicates that Tata might want to create more efforts to strengthen the rest of its portfolio as well, as the entire range is basically relying on these two brands.
Tata paid a significantly lower cost of $2.4 billion for JLR, which was half of what Ford had actually paid for the brands. To finance this and related activities, Tata took on a $3 billion bridge loan from Citi and JP Morgan. The purchase was met with mixed reactions. For one thing, the deal involved Tata taking on a high level of debt, which worried some analysts. Furthermore, Tata's stock price fell during 2008. These and other factors contributed to the eventual downgrade of the company in August 2009 from B+ to single B by S&P. However, in spite of the downgrade, Tata received $300 million worth of loans from European banks later that year, which shows that investors still trusted the company. As of September 2014, this rating has increased to BB. Tata has also recently just paid off $3.1 billion for its acquisition of Chorus, which proves that it had the ability to take on such high-profile projects. There were also a number of advantages for the acquisition. First off, the acquisition enabled Tata to create opportunities to greatly improve its R&D capacity. Through the acquisition, Indian technicians and design consultants had opportunities for training. The acquisition also provided Tata with the opportunity to take a quantum leap in its design capability. Moreover, Tata has embarked on the shared platforms and joint development of hybrid technologies with Ford, which remains as a supplier for engines, stampings, and other car components. Aside from this, the deal has allowed Tata to gain more respectability as a global automaker. Throughout the acquisition, Tata now has a presence in Europe, a market on which we were previously absent from. The situation at JLR, nevertheless, can't be described as anything short of a turnaround. In 2008, we had an unfortunate layoff in our plants in Britain, and, in fact, in October, there were times where factories would only work for a few days a week. As of 2010, however, the company returned to full capacity, which led them to rehire labor to meet such demand. In one of our sites, in particular in our Harewood plant, we went from producing 190,000 cars a year in 2008 to working full cycles to produce 350,000 cars a year. In fact, Tata recently invested £370 million to recondition and increase the capacity of our plants throughout Britain. And the secret to our success is that we're streamlining manufacturing strategy to improve efficiency. All in all, JLR's engineers are working hard to ensure that this recent momentum is maintained. JLR has indeed become an engineering driven while adhering to market demand. For instance, within JLR we have grown our infotainment team from 8 people when we were part of Ford to more than 400, following market trends to offer world-class systems in our vehicles. Furthermore, after intense R&D, we've been able to downsize and meet emission targets, going from V12 engines to V6 and V4 without loss in vehicle performance. In the coming years, we believe, Tata will continue to grow JLR into a prosperous business in the luxury automobile sector. While it's true that immediately following our acquisition, our company faced many challenges, those times are most definitely behind us. Our shareholders have believed in us, and in the end, they don't seem to be disappointed. Our stock has appreciated more than 400% since the acquisition.